Business Growth at Lake Norman Chamber. We have a program today that may not be all that exciting, but is definitely relevant in this tough time with our issues that are economically driven. Driven by COVID, that have indirectly driven other issues and created other chaos in our world. And so one of the topics today will cover what's happening in the world of landlords and tenants and how to get along during this tough period of time. Charles Knox with the Knox Group. Charles is the president of the Knox Group and also is on the board of Aquesta and has many other accolades and experience. He has a beautiful picture on the Lake Norman Chamber website, probably from 20 years ago. Picking on you, Charles. But Charles will be our speaker today. And then obviously Bill Russell is our executive director of Lake Norman Chamber and works tirelessly for all of our benefits as members. And he's really trying to turn up the heat here the next couple weeks with regard to getting ourselves ready to relaunch our businesses, and he's been really working hard on organizing some great programs and speakers for other topics. So Bill, I'll turn it over to you, and then I'll wait for next steps.
Thank you, Dale. And what you may want to do, all of our participants that are joining us on Zoom, you may want to go ahead and mute yourselves in case you have anything in the background. We don't want to take away from the presentations, so you may want to mute yourself. This is had originally been designated Small Business Week, May 4th through the 11th. With the pandemic, the Small Business Administration actually kicked that down the road a little bit. We don't know when the SBA will actually designate a week, but the Chamber of Commerce, we stuck with the original date, and we've actually added another week. So this week and next week, we're going to be having a program every day. All of these events and seminars will be virtual. We're going to allow any chamber, any member, any business to join, whether they're a Lake Norman Chamber or Commerce member or not. For a list of all of our seminars and events, please go to lakenormanchamber.org. You can go to lakenormanchamber.org and see all of the events that we're doing. And it's kind of impromptu, but I have my board chair, Richard Pappas, on the line. Richard has been, for the last 2 weeks, been inundated. He's a banker, and he has been processing a lot of loans. So you want to share a little bit, Richard, about what you're doing and welcome the people who are on the line today?
Sure. Welcome to another great chamber event. Appreciate Bill putting it together and Sylvia, and obviously our speaker, past Chairman Knox. Wanted to, I guess I would, in addition to saying welcome, would say that your bankers are working, your community bankers are working tirelessly to make sure that round 2 of the Paycheck Protection Plan is being implemented for those businesses that were not getting taken care of previously. Right now, kind of spinning my wheels with folks that are coming to me because they haven't heard from their banks. And when we apply for the PPP number, the reservation of funds, we're getting rejected because they already have it with another bank. So that's causing a lot of wasted time on our end and with other banks because folks are going to multiple banks. So that's really been the biggest bottleneck that we as an industry are dealing with, but we're just trying to help our customers, and I'm sure we'll hear more about banks trying to help customers as Charles gives his presentation. Thank you.
Dale, just before we go back to you, I want to thank you and Rhonda for putting the Zoom call together today and for what you're doing in terms of our business growth. I know you've got a lot of exciting programs coming up this year. I want to thank my past board chair, Charles Knox, for taking the time out today to share this program. So I'm going to kick it back to you, Dale.
Okay, just before we jump back in with Charles, at the end of this, I'm glad Richard's on. It's probably good. We may take, if there's time, we'll talk a little bit about just sort of the state of PPP and sort of next steps with loan forgiveness and some of the recent guidance and what guidance we're still waiting on. And then we'll save that for the end. But Charles Knox is our presenter here and has a unique view, as he's both a tenant in some cases and a landlord in some cases. So therefore, he's probably the perfect person to present on this particular topic. So Charles, I'll let you take it away.
Well, thank you, Dale, and thank you everybody for giving me the chance to try to share a little bit of my 30 years of experience in this business. Although This is by far the strangest event that I've ever lived through in real estate. When I was asked to talk about the landlord and tenant situation, as well as just property rights in this kind of scenario, I thought maybe it would help to go to real estate 101 class and explain a little bit about ownership of real estate. There's something called fee simple title, which means you own the property outright. In all likelihood, that's what most people own their house in. Some people own their business property that way. And then there's something called a leasehold estate. And most people think when they rent space, they're just a tenant and it's a contract. But in fact, there is a transfer of the real estate ownership rights to that tenant. They don't get all of them. They can't give the property away. They can't tear it down, but they do have the right to own it effectively for the time period in which the lease covers. And that's important because as a tenant representative and a property manager, we are getting inundated by calls from folks who want to know, what can I do? It might be a landlord saying, my tenant hasn't paid rent. What are my options? It could be a tenant of ours that we've represented calling and saying, our business is in trouble. What can we do? Can we stop paying rent? And basically, my initial thought and my initial guidance is, it depends. It depends on what your lease agreement says. And there's a plethora of lease documents out there with all kinds of different provisions in them. COVID is a unique situation because it could be viewed as a force majeure type of event. And some of you may have seen that in your own leases. Some standard leases, like the North Carolina Board of Realtors lease, doesn't have a force majeure clause per se. And force majeure just means, in French, highest power or higher power. And it's an event where if a hurricane came in and blew the roof off the building and you couldn't occupy, that's an act of God, and therefore force majeure would kick in. This is different, and in most cases, the force majeure language is not kicking in to prevent a landlord from collecting rent. So really what's happening is landlords and tenants are negotiating. They're trying to come up with solutions that work for everybody, and they've been all across the board. There's an example of a big landlord in California, the Irvine Company. You guys might be familiar with Orange County, California. Irvine Company developed the majority of it. They went to all their retail tenants and said, you don't have to pay rent for the next 3 months, but they're not giving it to them for free. They're deferring it. And they're basically saying you can pay it from January 1st of next year through December 31st, and you're spreading out those 3 months of deferred rent. A lot of landlords are trying to do that, deferred rent as opposed to free rent. We've had tenants ask for, I learned a new term, rent holiday, and that was from a British company. I'd never heard rent holiday before, but I had to clarify, did that mean they wanted to just defer their rent or get free rent? And of course, everybody would, if you're a tenant, you want free rent. If you're a landlord, you don't like free rent at all. That's a dirty word for most landlords. If in this situation, I would say there's several things you can do as a tenant or as a landlord. First of all, good communication is key. If you're having problems or if you've been shut down, you need to be in touch with your landlord asking for as much as you can get. I mean, if you're on the tenant side, ask for free rent. One of the things that I would say is critical in this particular situation, unlike the situation where the roof blows off, is there are these government loans. As Richard mentioned, there's two different programs, the EIDL and the PPP loan programs. Most landlords that I'm dealing with, whether we're the property manager or ones that I've dealt with in other situations or just friends that are in the industry, most landlords are asking tenants, have you applied for rent for relief through the government? Because some of those funds can be used for rent in addition to personnel expenses. Understand as best you can your landlord situation, because you may or may not know whether your landlord has a loan on the property. So, for example, a tenant can come to a landlord and say, hey, I want free rent for the next 90 days, and the landlord may not be able to grant that. He may have to go to his lender and say, hey, can I give this tenant free rent for 90 days, or is that going to put me in default of my loan? And We'll talk a little bit more about the loan situation in a minute, but if you can figure out whether your landlord has a loan on the property, that gives you a little bit of an advantage on knowledge and on the situation. If you're in the landlord's chair, one of the things that we're asking for, in addition to have you applied for grants, is I want to see your financial statements, because I want to know how dire your financial situation is. Are you just asking for free rent because everybody else is asking for free rent? And if that's the case, as a landlord, I'm less sympathetic. I know of at least one company in Mecklenburg County whose name you would all recognize, who I won't throw out, but they've asked all their landlords for free rent. But I've seen financial information that says they probably have a lot more money than all the landlords. So it's a situation where you kind of scratch your head and go, well, do you really need it? Or are you just asking because you think you can get a better deal on your business? So granted, it's an unprecedented situation where we are. One of the other things you can do is look at where other people in your industry are. If you're a restaurant, all the restaurants are shut down or struggling with curbside service or delivery service. Some folks, we have tenants that are in the exercise business. And if you're a health club, they've just forced you to shut your doors. If you can find out what other tenants that are similar to you are getting, then it may give you a better idea of what you can expect your landlord to do. If you own property and you're having trouble meeting your mortgage, this is a little bit different, but very similar. You can approach your lender and ask for relief. And Richard may be able to answer this much better than I can, but I do serve on the board at Aquesta and have chaired the loan committee there. So I have I have enough knowledge about banking to be dangerous, but different lenders will do different things. If they too would ask for your financial statements, if they don't already have them, they'll want to understand what the situation is, because banks don't like to do what's called a troubled debt restructuring. It's a TDR and for people in the banking industry. And if a borrower can't pay based on the terms of their loan agreement, a bank can restructure the deal, but most times they have to categorize it as a TDR. And that throws it into a different category as far as the regulators are concerned. In this particular environment, they're getting a little more flexibility in that regard. And so the banks are typically, and other lenders like life insurance companies, are being a little more flexible, knowing that this is so widespread. It's not just a company that's gotten in trouble for doing something that didn't work with their business. A few things you can do there. You can ask completely for deferred mortgage payments. You can ask for reduced payments. A lot of lenders will agree to reduce the payment. It can make a significant difference depending on where you are in your loan cycle. Landlords are in the same situation. Keep in mind, as a tenant, if you do that, your landlord may be in that same discussion with his lender. So it's a little bit of a domino effect. If tenants ask for landlords for rent relief, and then the landlord has to ask the lender for mortgage relief, it's definitely a domino type scenario. I mentioned what you might have to provide your lender or your landlord, financial information. One of the other things a lot of landlords are asking for is a questionnaire to better gauge what you're doing in the downturn. Are there options for you to sell online? Are there options for you to work remotely? Just be prepared to explain to whether it's your landlord or your mortgagee, what you're doing, how you're going about getting ready to reopen, how you're trying to mitigate your own situation as best you can, because the better prepared you are for those discussions, the more likely they're going to be flexible. One of the other questions I've talked to Bill about, talking today would be, what is this going to do to the commercial real estate market? And I wish my crystal ball was completely clean and clear, but it's not. But I have been discussing this with a lot of real estate execs who are smarter than I am all across the country. And I got a few opinions, but they are simply my opinions and not the official position of the Lake Norman Chamber. Correct, Bill? The apartment market, I think, will suffer a lot short term. If you own multifamily units, there's a lot of struggle for people paying rent. But this consensus seems to be they'll be one of the quickest ones to bounce back, because people need to have a place to live, and they will not pay their car payment and keep their rent over, keep the roof over their head. Retail space, in my opinion, will suffer the most, both short term and potentially long term. We're seeing a lot of ordering online and things that you used to not think twice about going out to the store for, your even groceries. A lot of people are ordering their groceries online. So the grocery stores are doing well, but a lot of the mom and pop stores are really suffering. And the question is COVID going to accelerate the trend that was already happening in retail, which is fewer shop spaces, big malls and department stores doing poorly? I tend to think office is going to follow retail a little bit less severely. I've heard completely conflicting stories through this shutdown where everybody's trying to work remotely. I've heard on one extreme that we can't wait to get back to work because this just doesn't work to try to run a team and try to run a business remotely. And on the other extreme, I had another client of mine say, we thought through this and we think if we meet 2 or 3 times a week or maybe even 2 or 3 times a month that we can work remotely the rest of the year. So we're going to look the next time our lease rolls over at shrinking our space considerably. So, I think office is still a big question mark. The longer I think we learn to do these Zoom meetings and things like that and we get more comfortable, I think there will be an impact to office demand going forward. The industrial market, we do a lot of our work in and around the Charlotte metro area with industrial space, and that has suffered the least so far. Consumer demand may dip significantly, as people realize they can survive with less stuff through this process. And even though Walmart and Amazon are busier than ever, a lot of the smaller manufacturers and warehouse operations that supply consumer goods may feel a pinch, not today, but 6 months or even a year from now. That's our big concern as landlords is what does this look like 6 months from now, not just today? Because we do see it as a fairly significant shock to the economy, obviously, but also to the real estate industry. And what is that going to do? Are we going to have to pivot away from the historic demand cycles and look at just a true paradigm shift in our industry? All of that said, I could be totally wrong about it. So that's just my best guess 8 weeks into this process. I don't want to talk too long. I want to open it up for questions. So if anybody has any, I will do my best to answer them.
Charles, I'll go first. Kind of a statement and then a follow-up question. The PPP loans that are out there that we'll talk about maybe a little bit later, even more, but the PPP loans are for payroll, and a lot of the landlords themselves own buildings and may not have a bunch of people on payroll. So therefore, the landlords didn't get the opportunity to participate in PPP as a recovery. So they're really reliant on the tenants to potentially pay their rent. And even if they've got their own wherewithal, how might you suggest somebody who's in a position where they need help from the landlord, recognizing that the landlord may be struggling too, and maybe opening up a dialogue that isn't necessarily a negotiation or discussion? Would they need to look to their lease first? Should they pick up the phone and call their landlord? Like, what would be the order of protocol as somebody's going to explore that conversation?
Yeah, the first order of business would be to talk to your landlord directly, or if they have a property management company like ours, we handle all that for some of our landlords. So it's to pick up the phone and start the dialogue and try to get an understanding of what flexibility the landlord has. this is one of those situations where I think it's better to be open than try to keep your cards at your chest, because if you can't pay or you're really struggling, it's a matter of the most landlords want to keep you in business. They don't want to help you go out of business. So the question becomes how to structure a solution that is a win-win. I'll give you a good example of how I've seen this done lately. I had a tenant who needed to defer rent, and what we agreed with the landlord was that we will cut the rent in half for as long as the shutdown period takes. And then we'll take that deferred rent and push it off into next year, because there's some concern that we may be back into this in the fall, but let's push it into next year. And in turn, for every half month of deferred rent, we're going to add a month of lease term on the backside. So the landlord gets a little bit of a carrot for agreeing to share the pain short term. Now, they're ultimately going to get all their rent, we hope. We hope that the company will stay in business and pay back the rent that was due next year. And then you'll get a couple of extra months on the backside, which, the tenant will get the use of the property. So it's not really harmful to the tenant. It just, it's hopefully a win-win.
Charles, I have a question. Pre-pandemic, what was the inventory in the North Mecklenburg, South Iredell market in terms of our office space, retail space?
I wish I had thought to look up those statistics, Bill, and I really don't. One of the challenges we have in North Meck and South Iredell in even getting good statistics in that scenario is that we're such a small tenant market, and a lot of the buildings are small, and the folks who keep track of office inventory tend to have a threshold of 10,000 square feet and above for buildings for office, and I think it's 20,000 and above for industrial space. Well, in Cornelius, for example, half the buildings up and down Catawba Avenue wouldn't qualify for that minimum threshold, so they wouldn't even be kept in their databases. So it's a little bit tougher to know whether we've got a 10% vacancy or a 2% vacancy. But I can say personally, from having relocated my office in the last, actually we moved the week of the shutdown, which was great because both parking lots from our old office and our new office were empty. But it was a challenge, a real challenge to find many options in the 2,000 square foot range. And I think it's still fairly tight in that regard. And large spaces, we just don't have that many of them. So I would say the market was definitely, quote unquote, a landlord's market because it was tight. Whether this crisis swings the pendulum back to being a tenant market, I think we're probably a month or two away from really getting our arms around that. Don't know if that answered your question, but hopefully. I guess if people are muted, they can always post a question on the chat box if they feel like it.
Hey, Charles, quick question. I know you said you kind of have a crystal ball, but not really. What do you think is going to happen to cap rates going forward as we eventually come out of this, but businesses still see a lingering effect?
I think cap rates will have to soften somewhat. For folks who are not in commercial real estate, a cap rate is a way to value property, and you sort of an inverse relationship. The lower the cap rate, the higher the price, because you're dividing the net rent by a fraction. So going back to 8th grade math, if you divide something by less than 0, it's larger than when you start. So I think the cap rates probably will soften about 0.5%, but that's, again, my crystal ball guess. Before the crisis, and probably even so right now, there's more capital out there looking for real estate investments than there are good investments on the market. And that's why you'd seen such a compression where cap rates were down in the 6s, in some case even below 6. And to me, I wouldn't buy something if I had to pay a 5.5 cap rate for something. I'd rather stick it in the bank. But there are people who will do it. So, and now with I guess, Richard, the only asterisk I would put to that is because bank debt is so cheap now with interest rates so low, that may offset the softening in the cap rates. You can still borrow at such a gap between cap rate and loan rate. I can explain that in more detail if that's more finance 101 than they want. So I see a question up on the board that says, with SBA bogged down with the pandemic loans, I've heard that SA loans for property purchases could be delayed by as much as a year. Do you have any insight in this? And I want to take advantage of low interest rates, but worried that real estate market will not want to get involved with me. That might be a better question for you, Richard, than for me. I would say at this point, the SBA has been focused so hard and fast on those EIDL loans, which are not going through banks. That's directly through the SBA. And then of course the PPP as well. I suspect that the normal 7A program is probably a little bit slower than normal, but I don't know have you heard that it's a year or longer, Richard?
No, I've not heard that. In fact, our SBA department is still working pretty regularly on deals. Now, I don't know. They do have to get final, even though we're preferred SBA lender, they have to get final approval from SBA. That may be taking a little bit longer. But to your point, those PPP loans are done through the banks, really. SBA has very little involvement, if any. And so the EIDL loans they are working on, and it has bogged them down, but I think they're on the other side of that now. So I'd say if it's a 7A loan or if it's a real estate or equipment 504, I know those local nonprofit CDCs are very available. I sit on Carolina Business Capital's board in Charlotte, and we're constantly looking for deals for our pipeline. So those SBA loans are very available. I've not heard anything about a delay for a year.
Richard, do you know how long, if you applied today for one, how long the interest rates would be good for? Because if you went ahead and applied, even if it didn't fund for 6 months, would they lock them in?
No, they lock them in at closing. So especially for the 504s or debenture rates at a spot in time, which takes place after your bank closing. So it's locked in at that point. I can tell you they're very low. I looked at a 504 recently that was 30-year, or I'm sorry, it's a 20-year term in the twos, fixed, in the upper twos for 25 years on them. I mean, they're just ridiculous rates. So they're very good right now. I'll also tell you one thing that's bogging down SBA is no matter what type of SBA loan you may currently have, a 7A or a 504, part of the CARES Act included stimulus that paid your SBA loan payments for 6 months completely. It pays the fees attached to it, to the CDCs. It pays everything. So you basically have 6 months of payment forgiveness if you have an existing SBA loan of any kind. So I know that they're involved in those deferrals right now and documenting those. But other than that, there should be full availability on new deals. Hope that helps.
Thank you. Any other questions?
I have a question. It's going back to your original comment about people just simply asking for things they may or may not need. Sometimes we're seeing people withhold payments that they may or may not need to do. Do you have suggestions for small business? I have two parts to this. A, in requesting those funds, as in we need help too, or let me just leave that one first. Let's go there.
So are you asking the landlord for help?
I'm seeing it in both directions. So that's my two-part question. I'm seeing the landlord withhold the funds back to your firm. I'm seeing other clients withhold funds that have the ability to pay. And so my question is, let's talk about that negotiation piece right there. And then how do you handle that? Because we want to be sensitive. And yet we suspect that maybe they could, but everybody's deciding, as long as you don't ask me, I'm not going to, and those type of things. Yes.
Right. What we've done and seen in that scenario is the old adage, the squeaky wheel gets the grease.
Okay.
You know, talk to them loud and talk to them often if they're holding funds on you. We've had to do a little bit of that.
Okay.
And so I would say that's probably the best advice is just be in line first and
Okay.
be a nuisance because sometimes that can be to your advantage. So,
Thank you.
yeah. Was that both, that answer both parts of your question?
Pretty much does. You're telling me to be doing what I'm doing, and I'm trying to be sensitive, but I have had people just go, oh, I forgot. I mean, there is a lot going on, but then there are other things that I think, all right, let's be reasonable. If you're going to withhold, then I'm going to start asking,
Right.
do we have to do this? And how can we negotiate? As you said, although you said hold your cards, but I do think that no one's offering, but I guess the question then becomes, how do you say, if you don't have the need, perhaps we do,
Right. Well, I think some people, I have seen some folks even play on the heartstrings that, hey, I've got to have this, money, or my company is in jeopardy. What can you do? Can you pay half of it? Can you pay, a quarter of it? So that there's some cash flow coming. And again, a lot of people, it's really interesting, this scenario. Subway, for example, announced they weren't paying any of their landlord's rent, period. It wasn't like they went to every landlord and did a negotiation. They just said, hey, we're not paying rent for April. And, when you're a landlord and you're dealing with now there are a lot of them are franchise, but you're dealing with that kind of a behemoth. It's hard to argue with them. But nonetheless, I think there are remedies in the leases that they don't necessarily get a free pass. And folks need to, if you're on the landlord side, you want to protect the revenue stream, because that's a lot of people, there are a lot of retirees who live on their commercial real estate investments. And so they want their rent just like the landlord, like the tenant wants to keep their rent. So anyway.
Tough.
Charles, before you end your presentation, I've known you since 1996, you, Steve, and Gary. Share a little bit about the Knox Group and what is your niche in terms of the market?
Well, thank you, Bill. I started the Knox Group in 1991, so it's been around for quite a while. We are a commercial real estate firm primarily, although we have a little bit of residential agent activity, but I'd say 95% of our work is office, industrial, retail, investment, and land sales, so leasing. We probably are 60% of our business is in the Lake Norman region, but we work all through Charlotte. We wear 3 different hats. We're a property management firm, we're a brokerage firm, and we're a development firm. So we've built office buildings, industrial buildings. People always say, what have you built that I would know? And I said, do you know where Carburritos is in Davidson? And most people say, oh yeah. I said, well, we developed those 2 buildings right where they are. And we've built a lot of things, industrial park down in Cornelius off of Bailey Road. We've built medical office buildings and conventional office buildings throughout the region. So we've done them for ourselves or we've done them for companies. So if a company wanted to get out of lease space and buy land and build their own building, but that's not something they have any experience doing, that's one of the niches that we have. So it's a family-owned business. If you call our office and go through voicemail, you're going to get a lot of Knoxes on the directory. But that's a blessing, and that can be a curse. But it's 9 times out of 10, it's a blessing. So,
Dale, we're very fortunate that Charles has also been extremely involved over the last 30 years, whether he wanted to or not, in transportation. He has chaired our transportation committee. He co-chaired the Charlotte Regional Roads Committee for all of the chambers of commerce in the 17 county area. Charles, off topic, totally different topic, but today news from NCDOT that they were basically punting a lot of projects down the road. You have any thoughts in regards to the news today from NCDOT?
I'm disappointed. I know someone was trying to spin it that might be good because with the oil prices coming down, that asphalt numbers and construction costs might come down with it. Everybody's looking for a silver lining, but frankly, we've had, $30 million in Cornelius in bonds approved to share in the cost with DOT. And I think it sends a message from DOT to the local communities that if we're going to partner with you, what's the likelihood that you're going to come to the table when you say you're coming to the table? And it's a little disappointing. I recognize, however, that the state's going to have a lot less revenue than they anticipated. We've had a problem in North Carolina for years in the way we fund roads, and it's all been based on gas taxes. And with cars being more efficient, more Teslas on the road, things like that are not necessarily paying gas taxes because they're plugging into their outlet at home. We've got to figure out a way to fund the roads. We used to be known as the good road state, and I don't think that's the case anymore. I don't know about you, but I have, my office is 1.5 miles from home, and I have not filled up my tank since the last week in March. And I've never gone a month. Well, I've never gone a month where I was in the United States where I didn't fill up my car a couple of times. So it's a really different world with that right now. But I do hope they get back to it and can figure out a way to get these roads improved like they said they were supposed to.
Dale, you've also been very busy in regards to the CARES Act. Do you want to share some things that you and your firm have been doing?
Yeah, so, Richard's in the middle of it on the front lines of getting these submitted, at the bank. But we've been working with customers, helping them submit with their existing banks, jumping through hoops to figure out what the right bank is for them if they didn't have a bank participating, or a lot of the larger banks struggled in that first round. And a lot of the sort of the regional, super regional, Aquesta and FNB were both champions, as you guys are both represented here. Were great to work with for us. We're now thinking in our firm, we're thinking through the second side of this, which is the forgiveness side. And we're spending a lot of time organizing either people have already been funded and they're on to their 8 weeks of using the money for the appropriate uses, which again are payroll costs, utilities, rents, and also equipment leases as well, and then mortgage interest, all usable things. But the guidance for forgiveness is kind of, it hasn't really been fully issued by the SBA. They've issued a couple things, sprinkled a couple things. The law gives you the general answer on what is forgiven. But we're still waiting on a couple clarifying definitions around full-time equivalents, and we're waiting on clarifying definitions around what can be, what that 8-week period means, whether that's cash basis or accrual basis, or and some of that stuff is still unclear. So we're making sort of judgment calls with our business owners. But one of the things that has just came out that's really favorable to the business owners. There's a concern. I'll just, without dividing it up, there's a concern that, a lot of folks won't come back to work, and especially in the restaurant community. And that concern is real because folks are doing okay with the extra $600 from the federal government and whatever North Carolina employment is providing. And then, to come back to work potentially for same or less money is hard to do for someone who's receiving, benefits in the minute. So that's a concern. Well, the news on forgiveness and the reduction in the forgiveness calculation with regard to the payroll side is come out that if you offer to bring someone back and employ them again after they've been laid off, and they choose not to come back, and you can document that, you get to remove that from your forgiveness calculation. So that's favorable to the company. So that's one little piece of guidance that has come out, but we're still waiting on a whole lot of the rest of it. In the meantime, some people got their money already, and 8 weeks are ticking on by. So we're basically saying, look, think of comeback bonuses, think of unique ways to pay people to deploy the cash and get it forgiven in a way that aligns with what you're going to do with your business as best as you can. Some people are making the choice to just pay people 100% just to get the whole loan forgiven, and that's okay too. So every business is going to have their own wrinkle and their own things that they have to think through. It's really, there's a lot of lobbying still going on. The AICPA had requested to shift the 8-week period to when the business is open for operations. Because even if you wanted to pay people over the 8 weeks, the theory is that what are they really going to do that's productive to the business? So, or, you know, the business was required to close down by mandate and you know, hasn't been open back up. So now I've got this money, but I can pay people and they don't have computers. They can't even log in. You know, there are a lot of businesses that are not just office related businesses with laptops that are closed. So, you know, there's a lot of juggling going on with regard to lobbying and updates and what's going to happen. And I think, you know, the other thing, and Richard maybe knows this better than me, but this second round of PPP seems to be getting to a lot smaller loans, and it's not running out quite as quickly, although there's still probably 100 billion left or something, because some of the larger loans were done in the first round, and really a lot of the smaller, the self-employed business owners couldn't even get in line with a lot of the banks because they still hadn't processed the mainstream loans. So you know, that seems to be I know that there was some IT glitches this time around for the second round, but really the other thing is I've seen happen as an observation is we'd applied to so many different banks to where we would kind of put our names on the wait list at different banks. Well, I don't know, the last couple of days I've gotten probably 10, 12 emails of banks saying they're open for applications where they were closed before. So seems like it's loosening up a bit, but then, you know, we're going to run out of money still on the second round, and will there be a third round? I don't know. Those that are out there that still haven't applied, is this for me or not for me? You know, if you've had any kind of negative effect resulting from COVID, or you expect one and it just hasn't happened yet because people might pay you or can't pay you and you're on the receiving end, I would apply anyway. I mean, that's just my generic answer. Is it available for everybody or is it for everybody? There's a lot of judgment calls on that. And I would just say, if you feel like you're going to be considering laying people off or because of business purpose, you might as well go apply for it and use it. And maybe it's too late to apply. I don't know if you'll get in line. But, you know, I would say if you haven't, still do it, because you never know, there may be a round 3 as well.
Richard, that was going to be a question. I've had some chamber members, you know, say that some of the banks that they were dealing with, their application wasn't moving forward. They weren't getting return calls. Again, you probably say, well, they should have been FNB customers or Aquesta customers. But what would you say to those businesses who, to this point, because I mean, I'm fairly certain you're going to prioritize your First National Bank customers, as Aquesta is too. But what would you say to those businesses who have not been successful to date about getting their application through?
Well, I would say in general that we're seeing a slowdown after the initial IT issues in round 2. We've gotten through that. It was a lot of manual entry, but now things have opened back up and we're pretty well caught up and back taking applications online from customers and prospects. One of the things I mentioned before that I found is people think that because they haven't heard from their primary bank that it's going nowhere, they send an application to us. We go through all the difficulties of processing an application. It's not just clicking a button. There's a lot of behind the scenes work and documentation the SBA makes us do before we can even apply for the PLP number. We then apply for it just to find out that their primary bank already got one and just didn't communicate that. So if you've applied somewhere else, keep following up with that bank because that's your best chance of getting it done. Don't move on to another bank assuming it just didn't happen. They probably have a PLP number. That being said, the banks have got to fund that loan, not close it, but fund it within 10 days of assigning the PLP number. So if your bank is sitting on that PLP number, don't let it sit because SBA will not honor it if it's not funded within those 10 calendar days. I've seen some things Okay, so SBA is still coming out, to Dale's point, is still kind of coming out with some changes and some more guidance to the banks on what's counted and what's not in the forgiveness feature. And that's why we've only issued limited information to the folks that we've been working with, which has been a little frustrating because they've got the money and they have 8 weeks from the time you're funded to spend that money. But one of the issues has been, what I've read is some people are out there advising that you can prepay things like bonuses, you can prepay rents, and you can prepay utilities. Now, I've only read that. I don't know. I've read that publicly. I don't know if that's accurate or not. Have you seen any of that, Dale?
Yeah, I mean, the guidance on the leases is pretty clear in that the lease needs to have been effective as of February 15th and should be paid. I mean, it should be according to the lease. So if you're going to prepay rent, there's a lot of people that are looking at this like in a cash basis way, I guess is how you're describing that.
Mm-hmm.
I've heard conflicting information of what people say, but there's also still the law and what the law says. And I kind of feel like until there's regular, clear guidance, if you're going to be aggressive, pick your spots. And the lease is that one's pretty clear. On the payroll, I think spot bonuses are okay, probably. But you're not going to be able to squeeze, prepay 2 weeks of payroll per se, but it might be that it runs in that pay and it's you're fully vested in that pay, so to speak. And some of the things that we've read, there's some people that look at these laws super narrow and some people look at these laws super broad. And I think, I have heard if you've got a north of a $2 million loan, the SBA is going to look at every one of those. I've heard that. I guess while we sit and wait for the couple things to shake out, if anybody wants to, not mess with these reductions in loan forgiveness with regard to payroll, you still may not get it fully forgiven. But, the key is to get people back to full-time equivalent and at least greater than 75% paid by June 30th to produce that. That's probably one generic nugget to share. But, I don't know. I'm going to say stay attention. The frequently asked questions guidance is on the website of the SBA, and they update that every day. They're now instead of sending new ones out, they just add a couple answers to the end of the one and then say what date it's through. So I think they're up to 42 answers. A lot of those answers pertain to like who qualifies and how to get the funding. Some of those answers are speaking to forgiveness, but not enough. So we expect that there's going to be more as we get closer to forgiveness, more guidance that'll be clear.
One thing I'd throw in related to this that they kind of touched on is that know your banker. And if you only have one bank that you deal with, have a second. And I'm on the board at Aquesta, and when I have customers come to me, I always refer them to Aquesta, but I always tell them, talk to another bank too, because I had all my eggs in one basket early in my commercial real estate career here, and did a project over on Bailey Road, built it. It was completely speculative, and we filled it up, and I had 2 smaller buildings to add to the site and went back to the same lender, and part of the back buildings were pre-leased, and the front building carried all the debt service, but the bank said, no, we don't want to do it. And I could not understand it. Well, it had to do with they had too much concentration in commercial real estate, and I didn't even understand what that concept was. I do know that I'm on a bank board, but, banks are different. And, the big banks really stubbed their toe in this whole process for clients. They really did a piss poor job, pardon my foul language. But the smaller banks like Richards and ours, I mean, it was our moment to shine. And I always think a business should have at least 2 business banker relationships, whether you're borrowing money from both or you just have a small deposit relationship. If you've got a relationship at 2 different banks, you're always better prepared to deal with whatever the crisis or the business need is.
If you submit your PPP funding to more than one bank, once you know you got a loan number, call the other banks and let them know that you already got it.
Yeah, exactly.
Save them a bunch of time.
Yeah. That would-
We did a number of those things with some of our customers. So yeah, I know it's painful to go through those steps, Richard, and the underwriting of this was moving by the day. There was new guidance on, a new rule as people were applying for the loans. So
I think one of the biggest faults of the big banks was the lack of communication. And as Richard said, they may have had the number issued and they never conveyed it to the client that it's in, and you don't know. And the most complaints I've received during this whole crisis about the banking side of it was, my banker's not telling me anything. I'm calling and leaving a message. Well, in fairness to the bankers, I know, Richard, you probably worked a lot of 12-hour days, and I know our bankers at Aquesta did as well. They were slammed, but at the same time, they didn't do a good enough job at the big banks of communicating back to the client where they were in the process. So kudos to your bank, Richard. You guys did a good job. I've heard from several folks that F&B did a great job.
Thank you. That's good to hear. And I know I'm on the board at Ada Jenkins, and our primary bank is Aquesta, and they did a great job for us as well.
Good.
any further questions? Any further quick PPP questions out there while you got Richard on the phone and myself?
One thing that I didn't touch on, I'll just be real brief, is how we go back to work is the shifting discussion in our industry. And we're starting to hear from our tenants that have been shut down. What are we going to do to ensure we're either having good social distancing or cleanliness? And so, as you guys open up, think through what you need to do, but also you're welcome to ask landlords, like my tenants are asking us, are you going to clean more often? How do we know that the elevator buttons are going to be, so for example, we're putting those foam hand sanitizers in our common area office buildings that have elevators that everybody has to push a button to get up and down in. So there'll be a lot of that planning that needs to go into, COVID-19 phase 2, phase 3 reopenings.
And Dale, Charles is allowing me to segue into something I wanted to close us with. The Lake Norman Chamber of Commerce, on our website, we have a couple of documents specifically speaking to retailers about reopening their business and a protocol guide for opening up that was put together by 2 national associations for retail. We're also in the next couple of days coming out with a more comprehensive guide for all of our businesses as we ease back into being back to work at the lake. And we're reaching out today to our cleaning companies, both those that are cleaning companies and those that have cleaning supplies, because Charles just touched on it. You have to create a safe environment, not only for your own employees, but for those customers or clients. So we're going to have all of that on the website at lakenormanchamber.org. Again, as I mentioned when we started this program, this is going to be a 2-week celebration of our small businesses, the perseverance and the courage and commitment of our small business community. Tomorrow's program, we have Karen Bentley talking about leading through crisis. And so leading in management through crisis. We've got a bunch of programs coming up. Next week, we have Monday, Tuesday, and Wednesday. We have 3 nationally renowned speakers, motivational speakers. We're very fortunate. Many folks who attended our small business luncheon last year might remember that we have Steve Gilliland, who was a phenomenal speaker the year before, Chuck Gallagher. Both of those are coming back, as well as a female speaker that we have. Fantastic program. And we're going to wrap next week with a program, our Focus Friday, on the stress that COVID-19 has brought in terms of business owners, managers, families, all of us who have wrestled with this for the last 7 to 8 weeks. So again, please go to the Lake Norman Chamber of Commerce website at lakenormanchamber.org for a list of all of those seminars and activities. Dale.
Okay, thanks, Bill. Thanks everybody for today. This is recorded, so if you had some colleagues that didn't get a chance to see it, want to share this information with, feel free to do it. We're going to have a copy. The chamber will have a copy, and Charles will have a copy for you. And Rhonda will post it up on our YouTube site as well. So thanks for everybody for coming, and appreciate everybody's encouragement as we try to bounce back and get back out and have real business again for all of us, not just for the folks that are essential. So thanks for coming again.
Thank you, Dale and Charles.
Yeah.
And Richard.
Thank you.